all the OEM majors are there. So therefore, I'm extremely happy that we are all in on China, and we'll double down on China. There's make no mistake about it. For us, China is a very important market. As far as the UK market, this quarter has been a very good quarter for us, where we have grown well ahead of the market, and therefore that tells you that the brand is strong and thriving. The issue was a portfolio availability issue of the electric options being available. Minute the electric options started opening up in UK, you've seen the growth come back again. So today, take for this year, we'll meet our budgeted numbers in almost every market, barring China.
The entire management, in fact, for that matter, sounded extremely confident about things looking up in the second half. What is giving you this confidence? What are some triggers that you're currently seeing that could propel growth?
First half saw a series of one-offs, and I can start listing them out. We had customs duty changes in China, which means we had to price down our products. We had a series of what I call as launch issues that we had, which are
from one management to another. Let's go across to what the IOC management has to say.
Was 33.617 million ton, which registered a growth of 5.6%. The pipeline throughput was also matching in line with the refinery's throughput, and we achieved for the quarter we achieved a pipeline throughput of 21.367 million tons, as against 19.345, registering a growth of 10.4%. For the first 6 months, the pipeline registered a growth of 8.7% by pumping 44.217 million tons. The domestic sale for the quarter ending 30th September increased to 19.821, as against 19.009 in the corresponding quarter of previous financial year, registering a growth of 4.3%. The domestic sale in the first 6 months was 41.439 against 39.745 million tons, registering a growth of 4.3%. Regarding gross refinery margin of the corporation for the quarter, it was $6.79 per barrel, as against $7.98 per barrel in the corresponding quarter previous year. The GRM excluding inventory gain loss for the quarter was $5.88 per barrel, as compared to $9.14 per barrel during the corresponding quarter of previous year. GRM for the first 6 months was $8.44 per barrel, as compared to $6.08 per barrel previous year, and excluding inventory gains for the first 6 months, it was $5.54 per barrel, as against $7.74 per barrel during the previous year. The financial cost for the quarter was 1,188 crores, as compared to 822 crores last year. The finance cost for the first 6 months was 2,219 crores, as compared to 1,561 crores previous year. Company registered a profit of 3,247 crores during the current quarter of the financial year, as compared to the profit of 3,696 crores in the corresponding quarter of previous financial year. The variation is majorly on account of lower refining margin and increase in exchange losses, offset by increase in inventory gains. The corporation registered a net profit of 10,078 crores for the first 6 months ending 30th September, as compared to the net profit of 8,245 crores in the corresponding period of the previous year. This is again mainly due to inventory gains during current period, partly compensated by exchange loss. Regarding under recovery for domestic LPG is 354.70 per cylinder, and for kerosene it is 18.84 rupees per litre.
That was the management at IOC. Let's go across to Ajay now. Ajay, if you could just tell us about crude first. We'll talk about IOC in detail, but what is your view as far as crude is concerned? What do you think are the factors that have led to this decline?
Well, Pankaj, some really material developments which have happened as far as crude oil prices are concerned. One, that going into the November 5th Iran sanction, two things have happened. Officially, India is now among the 8 countries which have been spared from the sanctions or exempt from the sanctions. And the second, the crude oil prices themselves had tumbled whole lot, 16.